Hello, everybody. This is Patrick MontesDeOca with the Equity Management Academy live weekend podcast for October the 8th, 2021. Gold and Bitcoin entering stagflation waters. Equity Management Academy mean reversion trading. Summary. The unemployment numbers were about 190,000, expecting about 500,000 new jobs. There is a high probability that the economy will go into a slowdown in the fourth quarter. With this news, it's going to be difficult for Chairman Powell to raise rates or taper. I said, quote, we have conflicting fundamentals with inflation fears based on supply chain shortages and a slowdown in the economy. Is it stagflation? That is what it sounds like, but let's see how the market reacts. End of quote. This idea was discussed in more depth with members of my private investment community, mean reversion trading, in Seeking Alpha. Fundamentals. The government just announced that unemployment claims finally fell to month, but 4.2 million Americans continue to receive benefits. The labor market appears to be struggling somewhat less than expected, but about twice as many Americans are on the benefits than before the pandemic. The unemployment numbers were about 190,000, expecting about 500,000 new jobs. It's a surprise. I said, so it has taken the argument of the Fed to taper or raise interest rates off the table. There is a high probability that the economy will go into a slowdown in the fourth quarter with this news. It's going to be difficult for Chairman Powell to raise rates or taper. I expect rates to go down, far more than people expect. We may be talking about lowering rates or using some sort of repurchasing agreement to manipulate the yield curve and synthetically bring down the long-term interest rates. I said we have conflicting fundamentals with inflation fears based on supply chain shortages and a slowdown in the economy. Is it stagflation? That's what it sounds like. But let's see how the markets reacts. With any talk of tapering or raising interest rates off the table, we recommend buying gold and silver on the pullbacks. Since the long-term trend for precious metals is bullish, I said if gold comes down to 1749 or 1750, that is an excellent high probability trade. Gold. Gold is showing a lot of trading activity. I said our proprietary artificial intelligence algorithm, the variable changing price momentum indicator, forecasts a 20% increase in gold in the next few months. However, gold may move down to 1707 to 1656 again before it moves back up. We may make the annual lows over the next few weeks. For the monthly VCPMI gold report, with gold closing below 1785, the trend momentum was bearish. A close above 1785 will negate this bearish momentum to neutral. The monthly price momentum of 1772 was also bearish. So this is the price velocity within the bigger trend. And a close above 1772 stop now will negate this bearishness to neutral again. On the downside, the monthly targets are the buy levels of 1707 and 1756 for the rest of the month. If we trade back up through 1772, we have targets of the sell levels above the mean of 1823 and 1888. We are getting a daily and weekly short trigger from 1777 and 1774 after taking profits at these levels. The targets is the daily average of 1759. With the economic news, it is a fast market in gold is coming down to support levels. 1750 and 1749 mark a harmonic alignment between the daily and the weekly numbers. 1750 is the daily buy one level of support, and 1749 is the weekly average price. So I said they form a strong area of harmonic convergence, making the highest probability entry points for a trade. Bitcoin. With the VCPMI targets for Bitcoin have been completed from 51,245 to 53,935. We have completed the sell one level of 56,082. The next VCPMI target is 57,438. On the daily, we met the sell one target and reverted to a short trigger. It then met the daily mean target and has activated a bearish price momentum. The target is the buy one level of 53,612. Right below the daily mean is the weekly sell two level of 53,935. If we go below 53,935, it will activate a bearish trigger within the daily pattern. We use pivot points, but we go beyond the basic technical analysis and interpretation. The VCPMI AI incorporates moving averages, Gann, and Fibonacci formulas, reversion to the mean principles, and other analytical approaches to produce the pivot points that the VCPMI algorithm highlights. At the sell one and buy one levels, there is a 90% chance of the market reverting from those levels to the mean if activated, while the sell two and buy two levels have 95% probabilities of the market reverting from those levels to the mean. 50-50 standard deviation. These levels indicate the highest probability trades. They are not 100% guaranteed, but they indicate the highest probability trades. It provides a clear structure for your trading, I said.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.